Welcome. Whether you're a seasoned investor or just starting to think about your financial future, you're in the right place. Today, November 20th, 2025, let's talk about your money and the future. The world of finance is changing fast, and it's more important than ever to stay informed. The headlines are loud, the market is jittery, and many wonder, has the AI boom already peaked, or is there more to come? You've seen stocks soar, then dip, and you're asking, could this be another bubble, or is something bigger happening beneath the surface? That's a smart question. It's your money. You deserve real answers, not just hype or panic. Here's what the experts at UBS are saying. The AI boom isn't ending. In fact, it's just getting started, and the opportunities are expanding. This isn't a short-term trend. It's a technological revolution that will drive markets, reshape industries, and create new possibilities for years to come. So, set aside your fears for a moment. I'm not telling you to buy stocks tomorrow or to make any rash decisions. I'm telling you, get educated. Take the time to understand what's happening beneath the surface and how these changes could impact your future. The recent market shakiness? That's just noise in the bigger picture. The real story is about long-term innovation, growth, and the evolution of technology. We'll break down the UBS report in simple terms. Who's spending, why, and why this isn't a wild gamble, but a calculated move based on real trends. My goal is for you to walk away feeling powerful, informed, and ready to make decisions that serve your best interests. With knowledge, you make decisions from strength, not fear. Let's get started on this journey together. Let's talk numbers, because numbers don't lie. UBS projects that by 2026, global AI spending will hit $571 billion, a 35% jump from this year. By 2030, $1.3 trillion, that's 25% growth every year. Why does this matter? This spending fuels the entire AI industry. Chips, software, data centers, cloud computing. Every dollar spent on AI becomes revenue for another company, creating a powerful cycle of growth. This isn't theoretical, it's real, global investment. UBS even says their estimates might be too low. Demand for AI computing is accelerating faster than expected. We're at the start of a massive multi-year investment cycle. Companies aren't just testing the waters, they're building the future. This is the foundation for the next decade of tech and market growth. When you see these numbers, don't just see risk, see opportunity. The scale is unprecedented. $1.3 trillion is a huge number, but who's spending it? Are companies risking it all? Here's the difference. Today's tech giants, Microsoft, Google, Amazon, are financial powerhouses. They generate enough cash from operations to fund their AI ambitions without strain. This isn't reckless spending. It's strategic investment from a position of strength. Some companies borrow, but it's a choice, not a necessity, often to take advantage of low rates. Think of it like getting a low-interest loan even if you have cash, because you can invest that cash elsewhere. These are calculated moves, not desperation. The AI boom is being driven by the world's most financially stable companies. Their balance sheets are healthy, their cash flow is strong, and their investments are smart. This stability makes the AI rally far more durable than past bubbles. It's not a gamble. It's a well-funded, long-term bet on the future. That's a game changer. Every hot tech trend gets compared to the dot-com bubble. It's almost become a reflex. Whenever a new technology surges in popularity, people warn of another crash. But is that really fair, or just an easy headline? But this time is different. The landscape has changed in ways that matter. Back then, it was startups with no profits or real business plans. Many companies were built on hype, not substance. And investors chased dreams that never materialized. Today, it's global giants with real products and massive profits. These are established businesses with proven track records, not just hopeful ideas. These companies aren't hoping to make money. They're using huge profits to fund the next wave of growth. Another difference: transparency. Investors now demand clear roadmaps and accountability. The dot-com era was full of circular financing tricks. Companies propped each other up with little oversight, creating a house of cards. Now, stricter rules make that much harder. Regulatory bodies are more vigilant, and compliance is a top priority. Today's deals are scrutinized, and financial shenanigans are rare. Investors and regulators alike are watching closely. The technology itself is also different. AI is not just a buzzword, it's a set of tools already transforming industries. The internet was a promise. AI is already delivering results. From automating tasks to unlocking new business models, the impact is tangible. Companies are seeing real efficiency and new revenue streams from AI right now. The benefits aren't theoretical, they're showing up on balance sheets. This isn't a bet on a distant future. It's an investment in a technology that's working today, driving measurable results. Remember the past, but don't assume history is repeating. The context, players, and stakes have all evolved. The players are stronger, the rules are tighter, and the technology is real. This is a new era, with new opportunities and new safeguards. This is not the same movie. The script has changed, and so have the actors. The ending will be different. The future is being written in real time, and it's full of potential. That's why the AI boom stands apart, and why it's worth paying attention. Let's look at NVIDIA, the poster child for the AI boom. They make the chips powering AI, and their growth has been explosive. Some worry about NVIDIA investing in AI companies like Anthropic, fearing old dot-com-era tricks. But UBS crunched the numbers. These deals are a tiny fraction of NVIDIA's earnings. In the dot-com days, circular deals sometimes exceeded 100% of profits. For NVIDIA, it's just 10% of projected 2026 pre-tax earnings. That's not propping up the business, it's strategic investment. NVIDIA's core business is overwhelmingly strong. The facts replace fear. Today's vendor deals are manageable and transparent. Customers buy NVIDIA chips because they're the best, not because of financial tricks. The investments are a small side story, not the main plot. Understanding this gives confidence in the AI rally's durability. The fundamentals are solid. That's what matters. Big spending is great, but does AI make money? That's the question on every executive's mind as companies pour billions into artificial intelligence. For years, the focus was on research and development. But now, the conversation is shifting to real-world profits. With AI, the answer is yes, and it's happening now. The monetization of AI is no longer a distant promise. It's a reality unfolding in boardrooms and on balance sheets across the globe. Cloud giants like Microsoft Azure and Amazon AWS are seeing accelerating revenue from AI services. Their platforms are powering everything from chatbots to advanced analytics, and the demand is only growing. Companies aren't just experimenting, they're paying for AI tools and integrating them into their businesses. AI is moving from pilot projects to mission-critical operations, transforming how work gets done. Products like Microsoft's Copilot are already generating significant revenue, with companies paying per employee per month. These subscription models are creating steady, recurring income streams for tech providers. Multiply that by millions, and the numbers add up fast. The scale of adoption is staggering, and the financial impact is being felt across industries. UBS sees huge monetization potential, returns that can outpace even the massive investments. Analysts are forecasting that AI could become one of the most lucrative sectors in tech history. This is the difference between a fad and a revolution. AI is becoming a profit center, not just a cost. Businesses are shifting their mindset from spending to earning, and the results are clear. Customers are willing to pay for smarter, faster, AI-powered services. They see the value in automation, personalization, and efficiency, and they're opening their wallets for it. This economic engine will sustain the AI boom for years. As more businesses adopt AI, the cycle of investment and return will only accelerate, fueling further innovation. The investment is happening, but now the earnings are catching up. The gap between spending and profit is closing, and the payoff is becoming tangible. For investors, that's the real story. The era of waiting for returns is ending, and the era of reaping the rewards is here. The payoff is already starting, and it's only the beginning of AI's financial transformation. Beyond the numbers, AI is making businesses better and workers more efficient, right now. Companies using AI report real, measurable productivity gains. Tasks like writing emails, summarizing reports, building presentations, and coding are faster and easier with AI. Imagine an AI assistant that drafts emails, summarizes long documents, or finds errors in code in seconds. This isn't science fiction. It's happening in thousands of companies. UBS highlights that these aren't just stories. Companies are tracking the value and time saved. Saving an hour a day per employee adds up to massive gains across an organization. It's like giving every worker a skilled assistant, freeing them for higher value work. That's why companies are investing billions. They see direct returns through increased productivity. This is a fundamental driver of value and competitiveness. AI's real-world benefits prove this is a sustainable transformation, not a bubble. Let's put it all together. Massive spending, strong companies, real profits, and productivity gains. This is the AI story. UBS's conclusion: the AI rally isn't over, it's just beginning. Short-term market jitters are normal, but the long-term trend is clear. The forces driving AI, investment, innovation, and productivity, aren't going away. Think of the internet or smartphones. There were bumps, but the long-term trend was up. Most companies haven't even started fully integrating AI. As adoption spreads across industries, the market for AI will keep expanding. UBS sees a durable, long-lasting investment cycle, still closer to the beginning than the end. The infrastructure is being built, the benefits are still ahead, the opportunity is still here. The journey is just starting. So, what does all this mean for you? AI isn't just a tech story, it's a money story that will shape your investments, your job, and your future. I'm not telling you to go all in on AI stocks. Diversification is key. But ignoring a trend this big is also risky. Being too cautious means missing out on growth that can help you reach your goals. Pay attention. Be an informed investor. The AI sector will likely drive market returns for years. Talk to your advisor about your portfolio's exposure to this trend. You don't have to pick individual stocks. ETFs let you invest in a basket of AI companies. Understand the world around you. The AI revolution is happening, and it's changing how wealth is created. By focusing on real spending, profits, and productivity, you can make smart, confident decisions. This is a moment of profound opportunity, if you're ready.